All right, so today we're diving into the world of insurance. You sent us some really interesting documents from HDFC Life, specifically their Q3 FY25 results. And let me tell you, things are looking pretty exciting over there.
Yeah.
Yeah, we've got excerpts from their board meeting outcome. We have their detailed financial statements. We even have a press release and investor presentation. We've got the whole shebang.
Oh, wow.
So what's the mission for this deep dive? Well, we're going to extract the juiciest bits from all this data. We're going to figure out what's driving their performance, and ultimately we're going to see what it all means for you.
That's the key, isn't it? Numbers on a page are one thing, but understanding their real-world impact, that's where it gets interesting.
Exactly. So let's start with the big wins. HDFC Life is reporting some serious growth, a whopping 24% increase in individual policy sales.
Wow.
That's not just a little nudge upward, that's a full-on leap.
It is impressive. And what's even more interesting is that it seems to be driven by a combination of factors. It's not just about selling more policies, it's about selling the right kind of policies.
Okay, spill the tea. What's the right kind of policy these days?
Well, it seems like people are looking for long-term security, especially in a somewhat unpredictable economic climate.
Right.
HDFC Life has been shifting its focus towards those longer-term savings and protection plans, and it looks like that strategy is resonating.
Makes sense. If you're feeling a little uncertain about the future, locking in some guaranteed returns and protections sounds pretty appealing.
Precisely. And this focus on longer-term value is reflected not just in their sales numbers,
Yeah.
but also in their profitability. Their value of new business, or VNB for short, is up by 14%.
Okay.
Now, VNB basically tells us how much profit the company expects to make from the new policies they're selling. And a healthy increase like this suggests they're on the right track. And their overall profit, their profit after tax, is also up a solid 15%.
So they're not just growing, they're growing smart. But what about the customers? Are people actually sticking with HDFC Life, or are they just hopping on board for a quick ride?
That's where their customer retention numbers come in. Their 61st month persistency rate, which essentially tells us how many people are still holding onto their policies after 5 years, has jumped to 61%.
Wow.
Now, that's a significant jump. And it suggests that HDFC Life is doing something right when it comes to keeping their customers happy.
That's huge. It means people aren't just buying these policies, they're finding real value in them and sticking around for the long haul. That says a lot about trust and the quality of the products.
It does. And it's not just about warm and fuzzy feelings. High customer retention is good for business, too. It means lower costs for acquiring new customers and more predictable revenue streams.
All right, so big wins on growth, profitability, and customer loyalty. But what's the secret sauce here? How are they actually pulling this off?
Well, if we dig a little deeper into their financial reports, we start to see some interesting patterns emerging. For example, did you know that about 3/4 of the profits from their ULIP or unit-linked insurance plans actually come after the 5-year mark?
Wait, so most of the profit from those plans doesn't show up right away. That's playing the long game.
It is. And it shows a commitment to sustainable profitability.
Yeah.
They're not just chasing quick wins. They're building for the future. And here's another intriguing detail. They've had almost zero surrenders in their traditional savings policies. That means people are holding on to those policies, which again speaks to customer trust and the perceived value of those products.
So they're building trust, focusing on the long term, and finding ways to deliver real value to their customers. But it can't just be about numbers, right?
You're absolutely right. HDFC Life isn't just sitting on a pile of cash. They're actively investing in ways to make things better for both themselves and their customers. And a big part of that is technology. They've got this ambitious initiative called Project Inspire, which is essentially overhauling their entire systems landscape.
Okay, so it's like they're giving their tech infrastructure a total makeover. What kind of changes are we talking about?
Think about it from your perspective as a customer. They're working on things like automating policy issuance, speeding up claims processing, and even making same-day payouts a reality. It's all about making things faster, smoother, and more convenient for everyone involved.
I can definitely see the appeal there. Nobody wants to wait weeks for paperwork to go through or jump through hoops to get a claim paid out. So they're making the customer experience more efficient and modernizing their operations at the same time. Pretty smart move, if you ask me.
It is, and this kind of forward-thinking approach seems to be a recurring theme with HDFC Life. They're not just reacting to the market, they're trying to anticipate future needs and position themselves for continued success. And speaking of positioning themselves strategically, let's talk about their focus on Tier 2 and 3 cities across India.
Right. That was one of the things that really stood out to me. in their investor presentation. They're seeing a massive surge in new customers from these regions, with 75% of their new business coming from Tier 2 and 3 cities this quarter. That's a bold move, isn't it? Focusing on areas that are often overlooked by bigger companies?
It is a bold move,
Mhm.
but it's also incredibly smart. Those Tier 2 and 3 cities represent a huge untapped market with massive growth potential. And HDFC Life is not just dipping their toes in the water, they're going all in.
So they're not just setting up a few branches and hoping for the best.
Not at all. They're taking a very targeted approach, tailoring their marketing campaigns to specific regions, working with local influencers to build trust, and even leveraging vernacular languages to connect with these communities on a deeper level. They understand that a one-size-fits-all approach doesn't work when you're dealing with such diverse markets.
It's like they're saying, we see you, we understand your unique needs, and we're here to help. That's a powerful message.
It is. And it goes beyond just acquiring new customers. It's about building long-term relationships and becoming a trusted partner in these communities.
Okay. So we've got this incredible growth story, a focus on innovation, and a commitment to reaching underserved markets. It all sounds pretty rosy so far, but I'm sure there are at least a few potential bumps in the road, right? No company is perfect after all.
You're absolutely right. While the overall picture is positive, there are a few areas worth watching closely. One is their new business margin, or NBM. It's dipped slightly this quarter, likely due to some recent regulatory changes around surrender policies.
Ah, yes. Those changes caused quite a stir in the insurance world. It's basically made it easier for people to surrender their policies early, which can impact a company's profitability.
Exactly. So it'll be interesting to see how HDFC Life adapts to these new regulations and maintains their strong margins going forward. Another potential concern is the broader economic landscape. Inflation is still a factor, and interest rates are rising, which can have an impact on their investment income and overall profitability in the long run.
So it's not all smooth sailing, but they seem to be aware of the challenges and are actively working to address them. But before we jump into those finer details, let's take a step back and look at their key financial metrics. These numbers can tell us a lot about their overall financial health and how they're actually achieving these impressive results.
Absolutely. Let's dive into their solvency ratio, assets under management, and embedded value. Those are some key indicators that can reveal a lot about their long-term prospects. Let's start with their solvency ratio. Think of this as a financial safety net. HDFC Life is reporting a healthy 188%, which is comfortably above the regulatory requirement of 150%.
So it's like a stress test for their financial stability, showing they can handle unexpected events and still meet their obligations to policyholders.
Exactly. Gives you, as a potential or existing customer, confidence that they're well equipped to weather any storms.
Now let's zoom out to the bigger picture and
Yeah.
talk about assets under management, or AUM.
Okay, this is the big one. Their AUM is a massive 3.3 lakh crore.
That's
A lot of money. It is. And it's not just sitting there. It grew by 18% year over year. This means they're attracting new customers and managing those funds effectively to generate returns. It's like a giant engine that's powering their growth.
And speaking of growth, their embedded value, or EV, also saw an 18% jump, landing at 53,246 crore. Now, I'll admit, EV is a bit of a head-scratcher for me. Can you break it down?
Imagine you're looking at a company's potential future profits from their existing business, plus the net value of their assets. That's essentially what EV represents. For life insurance companies, it's a crucial metric because it reflects their ability to create value over the long term.
So a growing EV is a good sign, indicating HDFC Life is on track for sustained profits and returns for its shareholders.
You got it. And they're achieving this while keeping a tight rein on expenses. Their expense ratio, which measures operating costs as a percentage of premiums, is at 20.8%. While it's slightly up from last year, it's still within a healthy range, showing they're managing costs effectively.
It's a balancing act, right? Investing for growth while keeping expenses in check. Now let's shift gears and dive deeper into some of their strategic initiatives. We talked earlier about their push into Tier 2 and 3 markets. What's fascinating is their hyper-localized approach.
It's not just about translating marketing materials. They're tapping into local influencers to build trust, and even recognizing the importance of regional events to engage with these communities.
It's like they're speaking the language of their customers, both literally and figuratively.
Exactly. They're weaving themselves into the fabric of these communities, and the results speak for themselves. Their APE, or annualized premium equivalent, a measure of new business, is actually growing faster in Tier 2 and 3 markets than their overall company growth.
So their focus on the Bharats segment, or non-metro India, is paying off. Now let's switch gears again and talk tech. We touched on Project Inspire earlier. Their ambitious digital transformation initiative. What are some highlights from your perspective?
They're making strides in automating and streamlining operations. For example, their testing center of excellence has automated over 650 journeys for product launches, enabling faster rollouts while maintaining high-quality training.
So they're embracing agility
Yeah.
and responding to market demands more quickly. That's crucial in today's fast-paced world.
Absolutely. And it translates to a better experience for you, the customer. They're implementing zero-touch straight-through processing and instant issuance for certain products. No more waiting around for paperwork to be processed.
That's a game changer, especially in an industry that's often associated with long wait times and complex processes.
Right. And they're not stopping there. They're aiming for same-day payouts on claims, which would be a huge leap forward. In terms of customer satisfaction,
I can imagine the relief and peace of mind that would bring. It's like they're saying, we've got your back, and we're here to support you when you need us most.
it's about building trust and exceeding expectations. And let's not forget the power of data. HDFC Life is using data analytics to make smarter decisions and personalize the customer experience. It's about tailoring products and services to individual needs.
So it's not just about being digital, it's about using technology in a way that genuinely benefits the customer. Now, with a company this large, managing risk effectively is paramount. What stood out to you in that regard?
They have a robust risk management framework, guided by a strong and independent board. Multiple committees oversee various aspects of risk, from investments to cybersecurity. It's a comprehensive approach, leaving no stone unturned.
It's like they've got a whole team of watchdogs, ensuring everything is running smoothly and responsibly.
Precisely. They're taking a proactive approach, especially when it comes to financial risk, for instance. They've diversified their investment portfolio, with about 98% of their debt investments in government bonds
Right.
and AAA-rated securities.
That sounds like a very conservative, low-risk approach.
It is. And they're actively managing interest rate risk, using a combination of natural hedges and external hedging instruments like FRAs and swaps. They're not leaving anything to chance, actively managing their exposure to market fluctuations.
So they're not just reacting to market changes, they're anticipating and mitigating potential risks. It's like they're always thinking a few steps ahead.
They are. And they've conducted sensitivity analyses to assess the potential impact of various economic scenarios on their embedded value and VNB margins. Essentially, they're stress testing their business model to ensure it can withstand different economic conditions.
It's like they're running simulations to prepare for any eventuality.
Exactly. They're taking a holistic approach to risk management, which is crucial for any financial institution, especially in today's volatile market.
Now let's talk about something that's becoming increasingly important for investors and stakeholders, ESG performance. How is HDFC Life doing in this area?
They're walking the talk when it comes to sustainability. They've got a detailed ESG report outlining their initiatives and progress across the board. They're addressing climate change, promoting financial inclusion, and fostering employee well-being.
It's like they're taking a 360-degree view of their impact on the world, not
Oh.
just focusing on profits.
Right. They're taking a multi-pronged approach, and it's paying off. They even scored in the 76th percentile in the S&P Global Corporate Sustainability Assessment, which is a testament to their commitment to ESG principles.
That's impressive. It shows they're not just ticking boxes, they're genuinely integrating ESG into their business strategy.
They are, and it's not just good for the planet and society. It also makes good business sense. Investors are increasingly looking for companies that are committed to sustainability, and HDFC Life is positioning itself as a leader in this space.
Okay, so we've covered a lot of ground here. Strong financials, innovative strategies, robust risk management, and a genuine commitment to ESG. But how does all of this stack up against the competition? What's the overall industry landscape looking like? And how does HDFC Life compare to its peers?
That's a great question. The life insurance industry in India is going through a dynamic phase with significant growth, especially in the private sector, and intense competition for market share.
So it sounds like a pretty competitive landscape. Where does HDFC Life fit in amongst all this activity?
They're right up there at the top, one of the leading private players. Their market share has been steadily climbing, reaching 10.8% for individual weighted received premium, or WRP. That's essentially a measure of their share of the total premiums collected in the market.
That's impressive, especially considering they lost their exclusive partnership with HDFC Bank a while back. They've had to find new ways to reach customers.
Exactly. And they've been successful in diversifying their distribution channels. They've forged new partnerships,
Yeah.
built their own agency network, and are exploring new digital ecosystems. They're not putting all their eggs in one basket.
Their investor presentation mentioned they now have over 300 distribution partnerships. That's a lot of avenues to reach potential customers.
It is. They're working with banks, brokers, and even tapping into these new digital platforms, casting a wide net to reach various customer segments.
And it seems like their product mix is in sync with the broader industry trends as well. There's a definite shift towards protection and annuity products, and HDFC Life seems to be right on the money with their focus in these areas.
Absolutely. After the pandemic, people are more aware of the need for life insurance coverage. It's
Yeah.
like a wake-up call, reminding us that life can be unpredictable.
Yeah, it makes you think about what's important, right? Having that safety net in place brings peace of mind.
Exactly. And HDFC Life is capitalizing on this trend by offering a diverse range of protection and annuity products that cater to different needs and budgets.
So they're not just riding the wave, they're shaping it, anticipating what customers need and providing solutions.
They are, and they're doing it while maintaining a laser focus on profitability. Their new business margin, while slightly down this quarter, is still healthy, and their embedded value is steadily growing.
Now, in another area you mentioned, was the growth potential in Tier 2 and 3 markets? It seems like there's a huge opportunity there. But it's also a unique challenge, isn't it?
It is. The penetration of life insurance in these markets is still relatively low compared to metro areas, but it's changing rapidly. Incomes are rising, awareness is increasing, and more people are joining the formal financial system. Think about it. As these economies grow, so does the need for financial security.
And HDFC Life is well positioned to capture this growth. They've got a deep understanding of these markets and a targeted approach that seems to be resonating.
You nailed it. They're not just setting up branches. They're investing in partnerships with local distributors and crafting customized marketing campaigns that speak directly to those communities. It's about building trust and establishing a long-term presence.
It's like they're planting seeds that will grow into strong, lasting relationships.
Exactly. It's a long-term play, not just a quick grab for market share. They're focused on building brand loyalty that will benefit both them and their customers for years to come.
Okay, so we've got a thriving industry, a company that's performing exceptionally well, and a massive untapped market ripe for growth. It's a pretty exciting picture. But here's the question that's been on my mind throughout this deep dive. What does the future hold for HDFC Life and for the insurance industry as a whole?
That's the big question, isn't it?
Yeah.
While we can't predict the future with certainty, we can definitely spot some trends and see how HDFC Life is positioning itself.
Okay, I'm all ears. What should we be watching for?
Well, technology will undoubtedly continue to disrupt the industry. We're already seeing the impact of things like artificial intelligence, big data, and blockchain. These technologies are changing how insurance products are developed, distributed, and managed.
So HDFC Life's investment in Project Inspire is a step in the right direction.
Absolutely. It's about embracing agility, efficiency, and customer centricity. Companies that can adapt and use technology to their advantage will have a clear edge.
And what about changing customer expectations? People are used to instant gratification and personalized experiences. In other areas of their lives, will they expect the same from their insurance providers?
Calling natural, customers are going to demand more transparency, more flexibility, and more personalized solutions.
So it's not just about offering a wide range of products anymore. It's about tailoring those products to individual needs and making the entire experience seamless and hassle-free. People want to feel valued and understood, not just like a number in a system.
You got it. And HDFC Life seems to be picking up on these shifting expectations. Their focus on customer centricity and their investment in digital technologies are strong indicators they're moving in the right direction.
But there's also the regulatory landscape to consider. The insurance industry is always navigating new rules and regulations. It's like trying to hit a moving target.
It's true. And those regulations are likely to become even more stringent in the future, especially when it comes to data privacy, cybersecurity, and consumer protection.
So companies will need to stay agile and adapt to these evolving regulations while still innovating and providing a great customer experience. That's a tall order.
It is a balancing act.
Yeah.
But HDFC Life seems to be navigating these challenges well. They've got a good track record of adapting to regulatory changes, And they're committed to ethical and responsible business practices.
So while there are definitely challenges ahead, HDFC Life seems well prepared. Their strong financial foundation, combined with their strategic vision and customer-centric approach, suggests they're on a path to continued success.
I agree. They're constantly evolving, pushing the boundaries of what's possible in the insurance industry. It's exciting to see where they go next.
It's been a fascinating deep dive into HDFC Life's performance and the broader insurance landscape. But here's a final thought for you to ponder as you continue your exploration. In a world where technology is changing everything, how will the very definition of insurance evolve? Will it become more integrated into our daily lives, more personalized, and more predictive? It's a question worth exploring. As we consider the future of financial security in a digital age,